Chen Zhao is the chief global strategist for Alpine Macro. That's an independent investment research firm. I asked him what he expects from the upcoming trade talks between the U.S. and China.
Very difficult to know because earlier, a couple of months ago, China sent in a delegation that is led by much senior officials, Vice Premier Liu He, and they thought they had a deal, and then eventually that deal was torpedoed by Trump. So this is like very, very low level of delegation. So I really don't know what kind of expectation that I can attach to it. The key point here is that they have stopped talking to each other, but the good thing is that they are resuming talk. That's why the financial market right now is responding to it. Dollar is a bit of a weaker. Commodities are rallying. I think that's basically saying that the market is very hopeful that they are finally resuming talk. And this is a positive thing, a right step in the right direction. Don't know the expectation.
Yeah, it's interesting you bring that up because there was an article out today. Derek Scissors at the American Enterprise Institute, who's considered a China expert, said the key thing is Treasury has no authority here. We've been down this road before. Treasury cannot make a trade deal, and it gets to the point you were making. Trump is the only voice that really matters. Is there somebody that the Chinese government can be negotiating with, or is it just you have to talk to the U.S. president?
You hit the right button. I don't know. Did you tell me? But, you know, they thought they had a deal with the Liu He, where, I mean, previously the problem is very clearly defined, which is trade imbalance. China runs huge bilateral trade imbalance, and that is very easy to define. We know the magnitude, we know the number. Now, if you look at the American demands, it becomes all over the place. Right now, America basically want to punish the Chinese economic model. They want to punish the state-led capitalism. They want to punish the theft of intellectual property right or forced transfer of technology. These are very soft issues that is very hard to define. I'm sorry, I don't understand how you're going to negotiate with somebody without a thing that is properly defined. Here, what we are dealing with is that American basically raise a whole bunch of demand that is completely, in my view, over the top, difficult to define, and impossible to quantify. How the hell are you going to negotiate anything with any solution on something like that? I don't know. I'm sorry. I mean, this is like very tough stuff for the Chinese government, and it's a very tough stuff for the United States. Key point here is, I want the readers here that on this program to understand. I personally believe that the Chinese government is preparing for the worst, hopeful for the best. It's not a huge deal, by the way. Markets are panicking. People are saying that the Chinese economy is cratering. That's completely out of whack with the reality. Be careful. The Chinese export to the United States is about $500 billion. $500 billion. That is the total value of China's export to the United States. What is it? It is about 3.5% of Chinese GDP. Okay, we're talking about tariff war. We're not talking about embargo. If you're talking about embargo, we're going to eliminate that export. No, we're talking about tariff war. Tariff war is not going to eliminate that to zero. Tariff war is not going to cut that thing into zero. Basically, you're going to undercut that. So let's say we're talking about half. Right now, Trump administration is talking about $250 billion of Chinese export are subjecting to tariff to between 10 to 25%. But that is not a huge deal at all. Bottom line.
Chen Zhao there joining us from Canada earlier.